Hi, I'm Pattu from freefincal. Let's talk about Access Bluechip Fund and discuss its performance. So the fund was launched in January 2010 and has an AUM of about 34,000 crores. It's the highest among the actively managed large cap funds. Of course, AUM is not that big a deal for large cap stocks compared to mid cap and small cap stocks. So it's not a great cause for concern now. Of course, since it's an active fund, we have to worry about beating the benchmark and so on when the AUM increases. But as of now, uh, I think that's not a terribly large AUM. So now this is based on past data. So you must understand that you cannot use this as an indicator for future performance, and that must be understood. Now the metrics that I'm going to show here are based on the monthly mutual fund screeners that we publish, and you can see here the market cap allocation history of Access Bluechip. The blue section is the large cap stock, so it's been predominantly a large cap fund. Occasionally it takes a small amount of mid cap exposure. You can see here and here. This is before the SEBI regulations kicked in, but once the SEBI regulations kicked in, it became a more or less true blue a large cap kind of fund. So we shall use three different metrics to describe the fund. So first thing is the rolling return outperformance. So here we will consider every possible 3-year, 4-year and 5-year returns, and let's say that we were able to measure 876 5-year returns, and out of these 876 5-year returns, the fund let's say bet the benchmark 675 times. So we will define a consistency score, that is the rolling return outperformance consistency score, as 675 divided by 876 as 77%. So that we will do over 3 years, 4 years and 5 years. And you can see here over 3 years the fund was able to beat the benchmark, that is Nifty 100 total returns index, 89% of times, that is 1344 out of 1518 times. And out of 4 years it bet the benchmark 1268 times out of 1271, so that's almost 100%. And out of 5 years it bet all the 1024 times, so 1024 5-year return periods, again that's 100% rolling return outperform. So that's excellent consistency, there's no problem there. Then we will ask what is the upside performance, that is whenever the benchmark is moving up, what does the fund do? Does the fund move up more than the benchmark or less than the benchmark? That's called as the upside capture ratio. Of course, I'm not defining it technically here, I'm just giving you a basic idea. I have done this in previous videos. So again, we will define a similar upside performance or upside capture consistency, and you can see that the over 3 years it's only 33%, over 4 years it's only 29%, and over 5 years it's only 12%. But this is nothing to be shocked about, because most funds do not exhibit consistent upside capture. They actually exhibit consistent downside capture. In fact, that is why I keep saying a fund which protects losses, whenever the benchmark falls down, the fund should typically tend to fall lesser than the benchmark. So a fund which protects losses can generate alpha or outbeat the benchmark over the long term. So that's defined by the downside performance consistency. So typically we ask, whenever the benchmark is falling, does that fund tend to fall lower than the benchmark or higher than the benchmark? So again, we will define a downside performance consistency score. This is based on a metric called downside capture. Again, I'm not going to get into the details of what a downside capture is. So you can see here the fund has got a downside protection consistency of 52% over 3 years, 60% over 4 years and 69% over 5 years. These are about average. They are not excellent, but they are okay. They are reasonable. Now, the returns are great. I mean, at the end of the day, upside or downside, whatever, the return should be higher than the benchmark. On that front, Access Bluechip on a rolling return basis has done excellently well. However, if you look at the trailing returns, if you look at the last 1 year, the Nifty has given 9.4%, Nifty 100, whereas the fund has given only 7%. Over the last 2 years, the Nifty has shot up by 21.7%, the fund has only moved up by about 16.8%. So since the recovery after the March 2020 crash, the fund has not done very well. Before that, before all this pandemic and all that business, the fund was one of the most favored fund among investors today the young investors may not like this fund as much because they look at recent past performance only. But if you look at the last 1 year and 2 year returns, the fund has not done well. But that is not, as an analyst, I would say that is not enough data to shun the fund. I mean, to say the fund is now is going to has performed badly. It's not yet time to say that. We can still give some time for the fund to perform. As an investor, I am not an investor in this fund, but if I were an investor, I would also feel the same way. I will say I would give the fund a little more time to outperform. Of course, then the argument about shifting to Nifty funds, Sensex funds, passive funds, and all that is there. But I just recently conducted a poll in Asan Ideas of Wealth, and we just found out that most investors, as long as they believe that the returns are reasonable, they tend to stay with the fund even though it has underperformed the benchmark. So on that basis, I would say the underperformance is only over the last 1 year and 2 year data, but that's still reasonable to say I would like to hold on with the fund. I like to continue investing in the fund and give the fund some more time. But for new investors, fresh investors, I would say you have to look at this data and recognize that nothing lasts forever. Everything will go down. I mean, there's always the law of averages. Whatever goes up will come down, whether it is Axis Bluechip or Parak Flexi Cap. So you have to take this into consideration, and it may be better for you in the long term to shift to Nifty funds, so you don't have to worry about outperformance and underperformance cycles. But for existing investors, I think if you are happy, I think you can continue and give the fund manager a little more time to get over this the slump over the last 2 years. Of course, there are many reasons given. Some people say Axis Bluechip follows growth investing. The growth investing was the trend before the pandemic, but after the pandemic, value investing became the trend. That's why ICICI Value Discovery did better and so on. But what is growth and what is value investing? These are arbitrary definitions, and therefore I don't want to align with that kind of an opinion. I would like to stick with the data and base my opinions on that data.